Welcome back to Iraqi Dinar News, your go-to channel for clear and timely updates on global currency developments. In today's coverage, we focus on an often overlooked player in Southeast Asia that's beginning to command serious attention: the Vietnamese dong, or VND. As of the current date in the USA, the Vietnamese dong is showing signs of a meaningful transformation that could reshape how global markets view this currency. What was once dismissed as just another regional note is now positioning itself as a serious contender in the emerging market space. At present, the Vietnamese dong trades in the 23,000 to 25,000 range per US dollar. That might seem like just another number, but recent subtle shifts from Vietnam's central bank suggest that larger moves may be in the pipeline. The State Bank of Vietnam has quietly raised the midpoint of its official exchange rate band. While it might sound like a technical adjustment, this change signals more than a routine tweak. It shows increasing confidence in the VND's strength and a potential shift toward a more flexible and globally accepted currency. This gradual evolution mirrors Vietnam's impressive economic momentum. Over the past 3 quarters, institutions like the International Monetary Fund and the World Bank have upgraded Vietnam's GDP forecasts. The nation continues to benefit from rising export volumes, especially in electronics and textiles, while keeping inflation levels consistently below 3%. With the tech sector and digital services leading the charge, Vietnam's economy is becoming more resilient and dynamic by the quarter. Foreign direct investment is also climbing steadily. Companies seeking alternatives to China due to rising labor costs and political tensions are flocking to Vietnam. This trend has given a huge boost to the country's financial buffers. As of now, Vietnam's foreign exchange reserves have surged past $120 billion, 0 cents, offering a powerful cushion that strengthens its capacity to manage external shocks and support the currency if necessary. This financial fortification allows the country to gradually guide its currency upward without sending shockwaves through its domestic economy. And the signs are spreading beyond Vietnam's borders. In financial centers like Singapore, European capitals, and even parts of Australia, we're seeing better exchange rates being offered for the VND. In Singapore, wealth managers are even including VND-length investment products in high-net-worth client portfolios. That's not something you'd expect unless institutional confidence in the currency was on the rise. Back home, everyday people are starting to make the switch too. For years, Vietnamese citizens preferred storing their savings in gold or US dollars, wary of relying on their local currency. That's changing. More locals are now keeping savings in dong-denominated accounts, and real estate deals are being closed more often in the local currency. This shift represents more than convenience. It reflects a deeper trust in the VND and the institutions managing it. A big reason behind this trust is Vietnam's surge toward a fully digital economy. In just the past 18 months, mobile banking and digital payments have grown at an explosive rate. With over 80 million smartphone users and more reliable internet access than ever before, digital financial tools are becoming mainstream. This tech-driven transformation not only enhances efficiency but also brings transparency, limiting manipulation, and weakening the black market's influence. Vietnam is also strengthening its global trade connections. Its role in the Regional Comprehensive Economic Partnership, or RCEP, gives it access to one of the largest trade networks in the world. At the same time, bilateral trade between Vietnam and the United States is at a record high, boosting foreign confidence. This momentum adds to Vietnam's reserves and exerts further upward pressure on the dong's value. All of this is setting the stage for something bigger. The momentum building behind the Vietnamese dong isn't just theoretical. It's visible in real-world economic behavior and institutional planning. While there hasn't been an official announcement of a revaluation, all the critical ingredients are falling into place. The structural groundwork being laid by the Vietnamese government, financial institutions, and even global partners points toward a currency ready to enter a new phase of recognition and respect. For investors holding the VND or those watching from the sidelines, the developments unfolding in mid-2025 mark a turning point. The Vietnamese dong is no longer a speculative curiosity for fringe investors hoping for a lucky break. It's fast becoming a stable and potentially profitable piece of a diversified currency portfolio. And for those paying close attention, the signs suggest the shift could happen sooner than most expect. There's a growing consensus that Vietnam's long-term goal is to allow for more flexible convertibility of the dong. That would mean fewer barriers to trading and investing in the currency globally, a move that could bring it closer to the stature of regional heavyweights like the Thai baht or even the Singapore dollar. But such a leap doesn't happen overnight. It requires digital infrastructure, trust, trade surplus, reserve strength, and coordinated monetary policy, all of which Vietnam is now steadily building. Importantly, domestic sentiment is matching institutional efforts. Vietnamese citizens aren't just reacting to policy changes, they're adapting. With local banks now providing more sophisticated financial services and mobile access expanding to rural areas, the general population is becoming financially literate and engaged. That shift plays a vital role in creating a sustainable ecosystem where a strong local currency can thrive long-term. Meanwhile, the State Bank of Vietnam continues to play its hand carefully, avoiding sudden shocks while gently steering market expectations. The small upward tweaks in the exchange rate midpoint are not accidents. They are calculated moves aimed at testing the waters while reinforcing internal confidence. This measured approach helps reduce volatility while giving foreign investors time to gradually increase their VND exposure. With currency stability comes opportunity, and right now, Vietnam is positioning the VND as more than a domestic instrument. It's turning it into a strategic financial asset. Financial institutions across Southeast Asia are adjusting their risk models to account for the VND's improved outlook. Even hedge funds and private equity players are starting to study its performance metrics in greater detail. What was once a low-profile currency is now moving closer to being a viable regional reserve. The big question on everyone's mind is, when will the actual breakout occur? While no one can put an exact date on it, the pace and precision of Vietnam's preparations suggests that they're aiming for a window of opportunity in the near term. Some analysts speculate that within the next 12 to 18 months, we could see substantial changes in how the dong is valued, traded, and perceived globally. As always, timing is everything. For those already invested, holding through this period of transition could yield significant rewards. For those still evaluating, the current moment offers a rare chance to get ahead of what may become one of the most remarkable currency evolutions of this decade. We'll continue tracking every development, every subtle policy signal, and every global reaction right here on Iraqi Dinar News. As the Vietnamese dong pushes forward on its path from underdog to major player, make sure you're staying informed, alert, and prepared. What happens next could reshape not only Southeast Asia's financial landscape, but also how emerging currencies are viewed around the world. Don't miss your chance to witness history in the making.